Let's examine what's going on now. This is where you have to be aware of a major support, resistance, major areas. You notice that the NASDAQ, this is NAS 100, one of my favorite instruments, it's dropping very fast. And if you pull your Fibonacci levels, it's not only not only has reached basically the 62% retracement, but if you look at your volume profile, it is now basically trying to get into the next level. If you see, this is where the beauty comes when using volume profile. See how it's trying to poke into the next level of volume profile area, which is all the way from this area down all the way to this area. So this whole area is one block, and the market might continue going through it. Now, that being said, if you look at a smaller chart, for example, 15-minute chart, it's cluttered. Sorry, let me clean it up. You would see that there's a big drop, and you would say, okay, it's hard to deal with this. But really, once you start the movement, we call this a poke in and poke back out. For example, you see how it dropped, and then the move up was even faster. This candle here, 987 tick chart, was much faster than all the previous ones combined, 1, 2, 3, 4. So this is a clear example of benefiting from a reversal level. So if my Fibonacci level was at this line here, I'll mark it, to be exact, I'll mark it here, right? If I look at my 15-minute or 987 tick chart, so this area will be considered something to look for if I'm looking for a reversal. And this is how exactly you look for reversals, despite the fast move that was intimidating. But if you look at a bigger picture, see how intimidating this move was. But if you look at the picture, you will see that even the reaction was faster. So this is what we call a poke in and poke back out. This is very good to know. It's always something that you look for, and levels like this can give you a good retracement. Even maybe the Nasdaq is not interested to get into a complete reversal. But obviously there is a chance for it to break this level here. Maybe see these levels here, this one. And if we break this level, we can continue all the way to this level. So there's a chance for us to make a good trade, a reversal trade. Now it's like it's early afternoon, now mid-afternoon, 1:22 p.m. Eastern, which means the trend has been established, but it could reverse, or it could give us a good buying opportunity. So for me to get into this level for a buy, I will drop my Fibonacci levels here, and I'll see if I have a level to get in. See, this is a good level to get in if I want to buy, and my stop loss has to be under this area, which is a poke in and poke back out. Going back to the small chart, let's go to the 60-minute chart. This trade did not hold the stop loss. But here's the thing, if you know how to manage your trades according to the logic, the move gave us 15, 16, 20 ticks or more, actually pip points. That is a lot of points. Let's assume your stop loss was here. You got out with 2 contracts, let's say let's say 10 points. That is on 2 contracts, first 2 contracts, you made like 80 pips or 80 ticks. And if you got stopped out on the last contract, you still made a little bit of money. Now, thinking about it, looking at it, the NASDAQ or the instrument or the price is allowed to poke even further as long as it's still valid. Look at the daily chart. You see it's poking, it's trying to poke below that 62%. As long as it doesn't close below it and it's still active, we have another level right here to consider for a long. Okay, so this is where you have to understand markets mentality. It's this is a different level, and it's even a better level, maybe a safer level to get into the next trade, because the market doesn't like these low volume areas. So I would assume that now, since we got out of the first trade, still made a little bit of profit, we can go back in again and try this trade again, now with the stop loss at a lower price here below this area. Okay, we are still active, we're still valid until we actually poke deeper into this level where the candle closes or goes deeper, the price goes deeper into this next level. Let me be a little bit more specific and clear. So basically, this is considered a poke in. This is considered a poke in. This is a wick. So we're still active above this level for a long. If you follow a logical trade management system or methodology, a winning trade is a winning trade. You cannot turn a winning trade to a losing trade, especially if you get a good amount of move in your favor. And finally, there was a huge move up afterwards. Of course, this happened late afternoon, just before the market closed. So the idea was to benefit from this. However, the benefit was not the best, but nevertheless was okay. But the direction went exactly as anticipated. You see, the daily candle did not close below the line, and the sell indicator was a big factor in giving us a final confirmation. But the timing was bad, because look, it happened, look at the time, 16:03, so 4 o'clock, just after 4 o'clock in the afternoon.